Recently, a survey released by providers of working capital solutions pitcher partners showed that 62% of small to medium enterprises claimed that access to funding was the biggest business challenge that they have to face. And at the same time, customer satisfaction with the big banks remains at very low levels. And yet, there are more alternative lenders available than ever before. So we need to ask why the disconnect. Joining us today to discuss why there is a disconnect and how SMEs can overcome the challenge they face with obtaining funding for the business is Director of Opibus Finance, Neil McKay. Welcome, Neil.
Thanks, Michael. Great to be here.
Now, the big four banks, are they supporting SMEs?
Well, I'm not into bank bashing, Michael, but certainly, from talking to SMEs, what I see and hear is that SME businesses have issues forming relationships with their bank, and particularly with their bank representative. And that's mostly because by the time they get to know them, and more importantly, the bank executive gets to know their business, they've moved on to, or they're moving on to their next role. So really hard for them to, explain to the banker how their business runs and for them to understand that. So, I think that's the biggest issue. But what happens a lot though, Michael, is that if the bank says no to something to a client or to an SME business owner, they think, well, that's it. I just can't borrow those funds. Where today there are so many options available to SME business owners with alternative lenders who have specialised products as such, which suit various needs that the business has. So, to be honest, the time is right, and never been a better time for SME businesses to kind of explore their options. But what I would recommend is that they do take on board or engage a good broker or a good advisor as such to help them, because they will understand that particular market.
What is the main point of difference between big banks and these alternative lenders that you mentioned?
Yes, so really, in the alternative lenders, the products are designed for small businesses, and they're designed for specific needs. Whether it's trade type finance or debtor finance. So across the board, it's not just a loan; it's a specific product. What's important to the SME, business is that they get an answer, quickly. And so the alternative lenders offer responses really quickly within 24, 48 hours. Most transactions are done, in a digital way. So, that it's no paper, documents and so forth are provided digitally. And the other good thing is these days, a great thing is that the assessment is actually made by getting a link to the customer's bank statements and assessing the business on the bank statements, whether that, and so that shows obviously revenue and expenses. And if you think about it, it's a pretty good way to do it, because you're getting really up-to-date information. Where in the old days where, it was financial statements and things like that, well, the financial statements could be, 6, 8, 12 months old. So they're using data to actually, see how the business is traveling right now. The other thing that they offer that you can get as well for SME businesses, and we did one of these recently, where if they're in a business that relies on FPOS for payments and so forth, the alternative financier can basically take payments out on a daily basis, but scale that in that when it's a quiet day, particularly if you're in a cafe or something like that, and Monday and Tuesday might be a bit quiet, they don't take very much, but on the days where trading is obviously higher and more cash available, they can take more cash on that day. And that just works from a cash flow point of view for the actual business itself.
They seem a lot more flexible from the sounds of it than what the banks were.
Yeah, very, very, very much so. It is that flexibility and, the understanding as such that, of that they have of the small business market. Now, their interest rates are obviously, higher, and that's where businesses need to get a good advisor or a good broker on board to find. It's a very crowded market, the alternative lender market now, and so they kind of need to get a good advisor on board so they can be directed to the best alternative for their business, and obviously making sure the pricing is right as well.
who are these alternative lenders, and where do they actually get their funding from, given that they don't have bank deposits and things like that to rely on?
Yes, there's a large number of them, as I said before. There's a few of them that are publicly listed companies now. I suppose the likes of Prosper and so forth. But a lot of them are funded either by private equity or by raising capital in the markets, or they could be a subsidiary of an overseas entity. There's a couple of those, a global entity. And the other ones, there's some that are actually funded by international and even our own domestic banks. So our big four banks have got funding into some of these businesses. So there's various ways that their ownership, I suppose, and their funding models. And that's an interesting question because once again, how they're funded can determine what types of loans they'll do and what types of terms and what type of businesses they'll get involved with. If they're in what's called a securitization model, which the banks generally fund, the banks really determine who they can lend to as such. So they can be quite restricted, where the others that have their own capital as such are less restricted. So once again, an SME business owner is not expected to know that. It's really an advisor or a broker who will know the right place for that particular business.
Well, that's a great point about what knowledge the SME business owner is meant to have. You've got to be a jack of all trades in a small business. Do these SMEs require any other assistance from their financiers, and do these financiers provide any other assistance?
Yes, well, I mean, they do. It's not only the loans that are offered as such, but they also can do various other things as well. Other products, and once again, they're more flexible as well around repayment terms. So they'll sit down and if they need to extend a term or do something like that to help a client out, they will do that. There are a number of things that the lender with that sort of flexibility can do to help that particular business.
What about security? What sort of security are the borrowers expected to have? I know, having spent a lifetime in small business myself, cash flow is everything. Sometimes I have plenty of assets, but that cash flow kills me. Is there a big difference between the security that banks and these alternative lenders want, or is it pretty similar?
Well, actually, they are in loans up to $500,000. They would be more relaxed around security or require less security than probably banks, and particularly the traditional banks, or what SME business owners are traditionally used to. So under $500,000, you can get what's determined to be an unsecured loan. What I mean by unsecured is there's no property involved securing it. Directors need to give guarantees in most cases, but that's okay. But yeah, so it's termed as being unsecured, and so that's a really viable alternative for an SME business, particularly if they don't have that property backing. So that's up to 500,000. If you're looking for a loan over and above that, generally they will look for other forms of security. And the borrowers and the SME business owners need to just be aware of what the requirements or what they're looking for, I suppose. Some will do lending around a caveat as such, which obviously isn't as onerous as taking mortgages and from a time cost point of view. So there is a bit of that in the market as well. But outside of that, if the loan amount gets larger, well, then yes, certainly they will do loans that are backed by property. It's really interesting. A lot of lenders now don't like taking mum and dad's home as security. That's become a big thing, particularly since the Royal Commission, where there's a reputational risk, I suppose, around foreclosing on mum and dad's home. So in a lot of cases, they won't entertain taking it. But if the business owner has a commercial property or something like that, or investment property or whatever it may be, then that can be a good source of security that will provide a higher level of funding, and also most likely a better interest rate as well.
Neil, what advice do you give to SMEs, your clients that are seeking these loans, to give them the best chance of being approved for it?
Yeah, great question. And this is a really important point now. SME business owners, they kind of need to be, really prepared well for these sort of things. I mean, the old, I'm sure people have heard of the 4 C's of credit, capacity, character, collateral and capital, and you know, they've been around for a long time, and it really hasn't changed today. So, you know, the starting point is really capacity, and every loan that gets looked at now, that's the starting point. Can the loan be serviced? If you can't pass that hurdle, then you're probably not going to go a whole lot further. So what that means is well prepared, you know, from a financial documentation point of view, financial statements, profit and loss statements out of their accounting software. If you think about it today, with the software packages available, most businesses can produce a profit and loss statement to the end of the previous month with a push of a button. That sort of thing is really important, I think, and it's part of the character as well, I suppose, that if lenders see that the business can't do that, then it's a red flag, you know. So are they really, you know, managing their financial position as well as they could be? So, you know, those sort of things of financial information, whatnot, is really important, even down to budgets and forecasts. You know, I know a lot of people don't do budgets or forecasts, but you know, they set the goals for your business. So if you've got that, then really, you know, that's a really good thing. You know, character is about, you know, as I said, the financial reporting, but it's also around, you know, how have you performed paying your debts in the past? Once again, and a lot of people aren't aware of this, lenders have more visibility to your credit rating, your repayment history, through what's called open banking than they've ever had before. So they can see your trade debts, how you've paid those. They can see obviously your financial debts, your credit score. Most people don't know what their credit score is. So, you know, those sorts of things come down to character. Do you pay your bills? It's one of the big ones, and people need to be aware of that. And you can actually get free credit reports from Equifax these days. So, and happy for people to contact me if they'd like some help with that. You know, we talked about the collateral. So really, what's securing the loan? Look, there's a lot of people who have offered security on their business through PPSRs or through mortgages or whatever, and they actually don't realise what security is in place. So once again, you can do checks on that through the registers and so forth, and really understand, you know, what you've you know, what you've been able to, you know, or what you have provided as security. So important to know that. And the last one is probably, you know, just capital behind you. So, you know, lenders like to see that you do have something behind you, whether it's cash in the bank, or you might own some shares, or you might have property or something, that if business does, you know, does not perform as well as, you know, the expected, that there's alternatives to kind of help the business out or get out of those situations. So they're the things that really businesses need to take into account when they're looking for loans.
Now, one final thing, Neil, we hear a lot about grants from governments, where governments want to incentivise and provide funding for certain businesses. Is this a good option? Are there tax benefits? How do businesses go about finding out about what grants might be available for their industry?
This is a really good thing for SME businesses now. So first of all, just financial incentives. So probably there's still the big one out there is the instant asset write-off that the previous federal government introduced. So up until June 2023, if you buy equipment for your business, you can essentially write off that equipment in the first year instead of over, you know, 3, 4, 5 years. And what that does is obviously reduces your profit, hence reduces your tax that you pay. So you get the benefit of, you know, new equipment in your business, and you're getting tax benefits as well. So that's a great situation, but it runs out on the 30th of June 2023, and I wouldn't leave it until the 30th of June 2023. You can take advantage of that benefit right now. And so that's a really good one, and I'm encouraging, and I do talk to businesses and encourage them to look at their assets and so forth, and, you know, would they be better off with something with improved technology or whatever that might help their business and get that benefit. The other one you mentioned is grants, and this was a new one for me, you know, recently, in that linking up with a person who's involved with issuing grants or organising grants, and there are so many grants available for businesses today that people don't realise, and that can be around employing staff, you know, buying equipment. If you do work overseas as such, there's huge benefits in that. So I'd encourage SME business owners to kind of get an expert who knows that, because I've introduced some people to this, and they had windfalls out of it, you know, that they didn't even know existed. So yeah, once again, I'm happy for people to contact me if they need some help on that, but it's a big benefit for business these days.
Great. All right, Neil McKay from Opibus Finance. Thanks so much for your time.
Thanks, Michael. Appreciate it.